the government might, should this government be returned, be willing to look at some of these things.
Kit Malthouse.
Madam Deputy Speaker, I'm grateful. A great joy to follow my Treasury Select Committee colleague, the member for East Lothian. Not that that should imply an endorsement of his views, rather than appreciation of his passion and erudition. I wanted to rise and welcome the finance bill if it goes through unmolested, and even if it doesn't. But to concentrate my remarks, brief as they may be, on a couple of areas. As an aficionado of my speeches and interventions, Madam Deputy Speaker, you will be aware that I've developed something of an obsession about the future of the British economy being based on a combination of science and private capital. We are fortunate in this country in being a science superpower. In the southeast of England, we have 5 of the world's top 20 science universities in King's, UCH, Oxford, Cambridge and Imperial. We have possibly the largest agglomeration of scientific research on the planet, not just in life sciences, but in physical sciences, synthetic biology, all sorts of new, exciting and interesting areas. And we are incredibly good at science. Our history of scientific endeavour points to that. There is one college at Cambridge that has more Nobel Prizes for science than the whole of Japan, for example. So we are good at science. What we're not so good at is turning those scientific discoveries into companies. We used to be good at it, of course. Back in the 19th century, much of the wealth of this country was built off the discovery and the innovation of the Victorian era, put together with what was then much more adventurous private capital to create some of the monoliths, the huge companies that we built over the following century and have now, sadly, too often, sold to the rest of the world. During that period, and particularly after the war, we were, however, lax in planting the acorns that would be required to produce this forest of oaks that we could chop down and sell to the highest bidder in the future. And so our ability, the number, our stock, if you like, of these large companies has diminished. And in fact, this is a European problem. Of the top 500 companies in the world, only 2 have been created in Europe in the last 40 years. Fortunately, the 2 are both British, Vodafone and Virgin. But that's not enough. And if we're going to continue our proud history of industrial innovation and creating these large multinationals, then we need to start planting those acorns. And so the operation of private capital, the dynamism of private capital, finding the ideas, the discoveries, the molecules, the therapies, the inventions, is absolutely critical. And I have raised again and again with the Chancellor at questions and in debates the complexities that are put in the way of individuals who wish to invest in some of these innovations. The primary vehicles for investment that the government allows by private individuals is the Enterprise Investment Scheme and the Small Enterprise Investment Scheme. These are both very welcome schemes. They provide incentives for investors and some tax relief on disposal, but they are complex. And over the period that they've been in place, the last sort of 8 to 10 years, the Small Enterprise Investment Scheme less time, there is built up, as there always is with these things, a body of case law around the operation of them. Investors have tried to be innovative with the scheme. Often investments have been disallowed on technical bases, and as a result, to a certain extent, people are becoming shy of using them. If you look particularly at the Small Enterprise Investment Scheme, it is the case that the number of companies availing themselves of that scheme has levelled off. It's broadly been the same the last 3 or 4 years. And so I welcome in this bill some of the measures to introduce flexibility into the EIS and SEIS scheme. If the government really wants there to be a cascade of private capital into small innovative businesses and into scientific endeavour, then it needs to make those schemes as flexible and as easy to operate as possible. At the moment, if I want to invest a relatively small amount of money, £10,000, £15,000 in investment terms, into a company, I need an accountant, I need a lawyer, I have to go and get pre-approval from the Inland Revenue to make sure that I get my tax relief, and all of that for a relatively modest amount of tax relief. So is it any wonder that the level of investment we're seeing through these schemes is not enormous? In this country at the moment, of investments below £2 million, the government is making 60%. Through various schemes and funds and the British Business Bank. That's all very welcome, but for a capitalist country, this is not right. The majority of private capital, it should be individuals who are making that, accessing retail capital, putting it next to science, and allowing the two to create this very powerful cocktail of wealth creation has got to be key to the British economy in the future. And so I hope that if we have another finance bill this year, the government will look to liberalising the investment regime for private investors in private businesses, particularly those that are innovative or science-based. That applies also to venture capital trusts. VCTs were an enormously beneficial invention when they came in, I guess about a decade ago. They attracted huge amounts of capital. There was a time when they were the last tax shelter. Many people saw them as that. The last 100% tax shelter. But they too have fallen out of fashion. The complexity of them, the poor returns that have come from them compared to the tax relief that is available to them means that the number of VCTs has shrunk and the capital under management by VCTs has been broadly static over the last few years. These two things together, private capital invest through EIS and SEIS, and private capital coming in through VCTs has got to be the twin planks that underpin the future of the British economy. We know we cannot rely entirely on foreign investment. We know we cannot rely entirely on institutional investment. Far too cautious for some of the innovations that we need investment into. And so re-energising private capital, providing really easy and flexible ways for individuals to invest quite small amounts of money into innovative companies will be absolutely key. So I welcome some of the flexibilities in the bill, and I hope that the government will be more ambitious over the next 12 months. The other thing I wanted just to mention was to lament the passing of the employee shareholder shares scheme. I understand that the government... Yes.
His speech is an absolute treat, Madam Deputy Speaker, because it's a much better version of the speech I made on science and markets in the vehicle technology bill that we've served on together. Does he agree with me that one of the key spirits we need to recapture from that 19th century, when we were taking science and innovation and turning it into big companies, is getting people who know how to do, getting engineers, like the spirit of I.K. Brunel perhaps, getting engineers to become entrepreneurs so that those who now know how to produce also know how to invest and how to serve people in a commercial way?
Yeah. My honourable friend makes a very powerful point. It is absolutely the case that this is a chicken and egg situation. If people with ideas and inventions and thoughts about starting their own business know that capital is more easily available, then they are much more likely to go out and take the risk and start a business. Very often it is the paucity of capital, the difficulty in raising it, that means that people don't proceed. A small anecdote. When I was Deputy Mayor for Business and Enterprise in London, I was at a life sciences fair where companies were making presentations about their inventions. And I came across a young group of biochemists from Cambridge who'd invented what they called an espresso machine for DNA. When you're doing primary research, you often need to manufacture DNA to research on. The standard way of doing it is you send off for it to be made, which is time-consuming and expensive, or you make it yourself by trial and error. They'd invented software and a machine that would produce the kind of DNA that you needed. I thought, this is incredible, amazing British invention. They'd won a prize at Cambridge and a small grant. I thought, they're going to need 5 million, 10 million. If I had it, I would give it to them. So I went up to them afterwards, and they were actually only trying to raise £250,000. They were having difficulty doing it. They were having difficulty raising £250,000. This incredible invention that was going to revolutionise research, as far as I could see. And during that job, I met time and time again young, ambitious, exciting scientists who had a molecule or a therapy or an invention, but were unable to access the capital, and so would go off and decide to be chartered accountants like me instead. And I think we lose a huge amount of talent that way. It's a very strong point. The second thing, therefore, to continue, that I wanted to raise was to lament, as I say, the passing of the employee shareholder scheme. This was the scheme introduced by the previous Chancellor, if you remember, where employees could effectively enter an agreement to vary their employment rights in exchange for having shares in the company. Sadly, the scheme was abused. It wasn't taken up very often for the purpose in which it was intended, and it was abused by others as a form of disguised remuneration. The government is quite right to close the scheme down. But nevertheless, it leaves us with a problem in this country, which is that not enough people in the United Kingdom participate in the balance sheet of the country. The Prime Minister has often talked about an economy that works for everybody, but an economy that works for everybody surely has to be an economy which is largely owned by everybody. And I don't mean owned in a statist or communist way, but an economy in which everybody has some kind of financial interest from a balance sheet point of view. We spend a lot of time in this House obsessing about people's profit and loss account. Is my income bigger than the next chap's income? Am I earning more than the lady round the corner? It's income inequality that we obsess about, but rarely do we obsess about wealth inequality. And yet intergenerational wealth is built off the balance sheet of the family. It is built off the investments made by one generation, albeit small, built by the next, expanded by the third generation. Certainly that's been the story of my family. Fairly lowly beginnings. Here I am now, and that's been built off the fact that my grandparents made investments, my parents started a business, they in turn, hopefully not for a long time, may pass on some of that wealth to me. We have a collective family balance sheet. We're able to buy stocks and shares, all those kind of things, and that is denied to lots of people in the country. And of course, the one place that individuals should have a share to a certain extent of wealth is in the companies that they work for. I think if we're going to really have an economy that works for everybody in the future, as I say, we need an economy that is largely owned by everybody. Now, the government does have schemes available, particularly for employee share ownership, where companies can set up pools of capital available for their shareholders. And I have been looking at this for my own business. But I have to say, again, it is an incredibly complicated scheme. Again, for relatively small amounts of money, I need lawyers and accountants and pre-approval from the revenue, and it's an incredible frictional cost of getting this underway. And so my plea to the government in getting rid of this employee shareholder scheme is to think, as we move towards the next finance bill and through the general election, about how we can facilitate the idea, make it in employers' interest, in business owners' interest, to involve their employees in the business in a capital sense, that they create for themselves a balance sheet of which they can start to build the kind of intergenerational wealth creation that I think we need to see in the country. And if we can get to that, then we'll start to build this economy that works for everyone. Two other small things, Madam Deputy Speaker, I wanted to make. Can I welcome the change to the allowance for investment in grassroots sport? You may not have noticed, but in the bill, it will now be deductible for businesses to make investments in grassroots sports, which will be extremely welcome to football and cricket clubs and hockey clubs and all the rest of it across the country. My business, I'm very proud, we have in the past sponsored local children's football clubs at schools and what have you, and I think the more we can involve business with particularly schools and grassroots sports for young people, the more they're going to see each other on the same level and be interested in each other, which is a good thing. Finally, I just wanted to say something about the overall tenor of the bill. It's become clear to me over the last 3 or 4 finance bills that in this House we are struggling or will struggle more in the future to tax a changing economy. We've seen in the national insurance discussions, in the business rates discussions, that the changing nature of business means that the kind of standard Whitehall way of taxing the world is not going to last for that much longer. We're moving into a world of cloud computing, of non-domiciled businesses anywhere, of cashless businesses that operate from third or fourth countries. We're moving into the gig economy. All those kind of things are going to be difficult for us to tax. And I think one of the challenges for us over the next Parliament, as we move through a general election, is trying to think really more radically about how we deal with the changing nature of our economy and therefore how we tax it to pay for the things we need. My personal view is that given the changing nature of our economy and the removal of a lot of cash from the business cycle, it may be time to start to look elsewhere than direct taxation. Your corporation tax is a difficult, complex, hard to collect. There is a big tax gap compared to VAT, which is relatively easy to collect and where compliance is high. If you ask me which one I would prefer as Chancellor, I'd probably prefer to have VAT. So it may be, particularly in an economy where we have international businesses transacting in the UK and extracting money, that we start to look at the notion of a universal sales tax, that we have a sales or turnover tax, which is more easily collected and may well mean that we can have a lower tax rate spread across a wider tax base, because we will be catching, as I say, international businesses who might be transacting from Luxembourg or Ireland. Fundamentally, the rule should be if the sale takes place in the UK, then the tax should be collected here on the sale, no matter where the company is domiciled. And I think we're going to have to think quite carefully over the next 5 years, as we get through perhaps a general election in the next few weeks, about the changing nature of the economy and therefore what we radically need to do here to keep up with that in this House. But beyond that, we're making good progress.
Yeah.